All right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. Not looking like another day that could start in the red today.
Well, absolutely right. Good morning to you. What's actually happened is that on the back of very thinly traded volumes across global markets, you're actually seeing quite a bit of a fall. So, like we mentioned at the start of the show, US markets, all of them have ended lower. In fact, a lot of, important stocks have started hitting their fresh 52-week lows, names like Apple, etc. Now, coming to the European markets, Europe, in fact, again, they just returned from a two-day break, and even there, market cues are very mixed. It's always been a flat to slightly negative, overhang that they have given as far as the Asian markets are concerned. Coming to crude prices, once again, very thinly traded volumes, but crude prices have actually lowered, in overnight trading session on the back of the fact that there are worries about demand resurfacing after the entire COVID scare in China. So Brent futures now trading closer to the $83 a barrel mark, and WTI futures closer to the $78 per barrel mark. Now coming closer to the Indian markets, past couple of trading sessions has been quite resilient. Yesterday, very choppy session. Today also, expect something similar on the back of the fact that it's also weekly monthly expiry, and also keep in mind that while the broader end of markets are outperforming, it's still a very minor reversal from the recent close. You will also see quite a lot of index rebalancing, and that particular weightage increases and decreases will lead to a bit of volatility in some of the index names as well. And also you have a new listing to keep an eye out for. So KFin Tech will be another stock to watch out for. Asian markets quite weak, and LJX Nifty 2 is indicating a gap down open.
Okay, yes, gap down open expected today. Thanks a lot for that, Vivek. Surbhi is joining us now. She'll talk about all the stocks that will be in focus today. Surbhi.
Hi, good morning. Few stocks on my watch list today. The first one up is JSW Energy, where the company completes the acquisition of Utkal for 1,048 crores. Next is Tata Power, where the company's subsidiary Tata Power Renewable Energy Limited receives letter of award to set up 255 megawatt hybrid project for Tata Power Delhi Distribution Limited. Spandana Spurti, where the company is going to sell stressed loans worth 323 crores to an ARC for 95 crores. Ashoka Buildcon, where the company is awarded projects worth 755 crores from Madhya Pradesh Purva Kshetra Vidyut Vitaran Company. And lastly, Coromandel International, where the company incorporates wholly owned subsidiary Coromandel Technology. The company will manufacture UAV, which is unmanned aerial vehicles.
All right, thank you so much for that, Surbhi. Finally going across to Mangalam, joining in with all the cues from the F&O space this morning. Mangalam.
Good morning. So while there has been weakness on Wall Street, our markets have been largely range-bound this week so far after a big move that we saw on Monday, and then, just consolidating. The SGX Nifty is indicating a downtick today. So the question once again is that opening at support zones, will we see some recovery from the lows or not? The FIIs on low volumes continue to sell our markets, almost 900 crore worth sale yesterday. But it is December series expiry. It's been a long series, down 362 points for the Nifty. And that's as far as the series is concerned. If you look at, levels during the series, we've seen a move of almost 1,100 odd points from the highs of 18,887 to 17,774 at the lows, which were hit just recently. FIIs covered some short positions in yesterday's trading session, and that was because there wasn't much follow through on the way down. So the longs have inched mildly higher to around 48%. But they've also wrote around 12,000 puts, and lower levels are protected is what the indication is, because in just the last 3 trading sessions, the FIs have written 1.62 lakh puts, and they've covered around 51,000 short calls. What are the levels that we're watching out for today? 18,200 call added around 22 lakh shares in open interest for a premium of 20 rupees. So levels upwards of 18,200 would face resistance, whereas the 18,100 put has been extremely active. 30 lakh shares added in open interest out there for a 40 rupee premium, telling you that 18,000 to 18,050 would be an important support zone, just where the Nifty is indicating, the SGX Nifty is indicating an opening. The important levels to watch out for on the way up for the Nifty, the 20-day moving average, which is 18,235, and for the Nifty Bank, that will be an important index to watch out for. 43,168 is the 20-day moving average. Punjab National Bank, that's the one stock that I'll be watching out for today. It's out of F&O ban on expiry day at a time when all the PSU banks have been doing extremely well.
All right, okay. Mangalam, Vivek and Surbhi, thank you so much for joining us. That's the trade setup for the day. With that, we'll slip into a break. Up next, we'll get you the latest as COVID concerns rise globally. We'll get you more details. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. As COVID concerns rise globally, the Health Ministry says that the next 40 days remain crucial as India could see a spike in COVID cases in January. The virus, however, is only moderately severe, and even if cases spike, it is unlikely that hospitalizations and mortality rates will be high. However, the centre is unlikely to bring back mandatory masking and fines for not masking in public places. International flight schedules are also unlikely to be affected, although passengers arriving from Southeast Asian countries may have to start filling Air Suvidha forms again as early as next week. The COVID situation in China remains grim. A New York Times report details how surge in COVID cases are pushing the country's health infrastructure to its limit. Several countries, including the US, are mulling restrictions on Chinese arrivals. CNBC Asia's Temur Nabili files us this report.
Now, the US government has just announced that COVID-19 tests are mandatory from any travelers arriving from China, tracking the footsteps of India, Japan and Taiwan. The measure comes amid a spike in China's virus cases following the abrupt reversal of the zero-COVID policy. So starting on January the 5th, all passengers boarding flights to the US from China, Hong Kong and Macau will need a negative COVID-19 test or proof that they've recovered from a previous infection. Washington is citing what it says is a lack of transparent data from Beijing as a key reason for the new restriction. What data they require is not yet clear. International health experts say millions of people are likely getting infected daily in China as the country adjusts to living without COVID curbs. China's hospitals have seen a big jump in COVID patients recently, straining the country's health resources.
Okay, that's all that's happening in China as far as COVID concerns are concerned. Moving on, let's talk about the Indian economy. Saw multiple challenges in 2022, ranging from a spike in energy prices from the Russia-Ukraine war to dealing with the fallout of the Fed's rate hike trajectory. Sapna is here to take us through the decisions taken by the government to deal with these challenges and also tell us what lies ahead in 2023. Sapna.
The initial impact from Russia's invasion of Ukraine saw Brent crude prices shooting to $130 per barrel, global food supply being disrupted, and inflation soaring. This posed multi-pronged challenges to the Indian economy. With April inflation shocking at 7.79%, the government swung into action. Adding to the freeze on pass-through of crude oil prices to petrol diesel, it restricted wheat exports in May and followed it up with a slew of other measures, including slashing excise on petrol and diesel and doubling the fertilizer subsidy. But as crude prices continued to rise, more was needed. India shrugged off intense global pressure and leaned heavily towards Russia for cheaper crude. So much so that Russia is now the top supplier of crude oil to India, upstaging traditional suppliers like Iraq and Saudi. But the government also cashed in on an opportunity these surging prices threw up. It introduced a windfall tax on oil cos and mandated them to ensure that domestic sales of petrol, diesel and ATF were at least 50% of their exports. Multiple reviews later, the tax remains, even though Indian basket of crude oil has slipped to below $78 per barrel. This is very close to the two-week average of $75 per barrel, below which threshold the windfall tax should become nil. Indications are the government hopes to garner close to 40,000 crores from this windfall tax by March end. But if the drop in crude oil prices sustain, that number may not hold. In the meanwhile, spike in global inflation prompted the American Central Bank to hike rates aggressively. And this pushed the rupee to record weak levels, from breaching 79 to a dollar on the 5th of July to 83.20 to a dollar on 20th October. RBI's measures to shore up the currency, which included more diversified sources of forex funding and internationalization of the rupee, have had a limited impact so far. The trade deficit continues to widen, crossing $198 billion in the April to November period. Meanwhile, between April and September, India's forex reserves dropped by $75 billion to $432 billion. Since then, RBI has managed to claw back reserves to around $564 billion, providing 9 months of import cover. It was also managed to make some headway on inflation. November CPI has fallen to 5.8%, which is within RBI's tolerance band. However, the rate hikes are taking a toll on the GDP. RBI has now revised the FY23 GDP forecast down from the 8 to 8.5% in the economic survey to 6.8% currently. That notwithstanding, India's economy expanded by 9.7% in the first half, thus continuing to be among the fastest growing in the world. The government has also stuck to fiscal consolidation and not resorted to additional market borrowings, which is a big plus. So, as we move into 2023, the challenges are plain. There's uncertainty over COVID infections, given what's happening in China and elsewhere. There's pressure to maintain growth with fiscal consolidation, even as large parts of the world stare at an impending recession, and of course, keeping inflation within comfort levels while revisiting fuel prices and maintaining a stable currency.
Sapna, thank you so much for joining us and giving us a detailed explanation as to what happened as far as the fiscal path last year was concerned. With that, we'll step into a break now. We get you all the cues from the commodities market after this very short break. Stay tuned. Welcome back. Well, after Maiden Pharma, another Indian pharma company now finds itself in the eye of a storm. Uzbekistan has claimed that 18 children have died in the country after consuming medicines manufactured by Noida-based Marion Biotech. As per reports on a local Uzbek news website, the Uzbek government said that 21 kids were hospitalized with acute respiratory diseases, a side effect of consuming the cough syrup Doc-1 Max, which Marion Biotech allegedly manufactures. 18 of these children have since died. According to the Uzbek Health Ministry, primary lab studies have shown the presence of ethylene glycol in the syrup. Remember, ethylene glycol is toxic and found in industrial-grade glycerine, which should not be used in pharmaceutical products. Uzbekistan's statement says the tablets and syrups being marketed under the Doc-1 brand have since been withdrawn from sale in all pharmacies in the country. The World Health Organization responded to CNBC-TV18's query on this incident, saying that it is in contact with health authorities in Uzbekistan. It has added that its teams stand ready to assist Uzbekistan in further investigations. Meanwhile, Indian Health Ministry sources say the cough syrup under question is not sold in India. The statement from Uzbekistan also says that the children who died took between 2.5 and 5 milliliters of the cough syrup at home for 3 to 4 times a day, which was higher than the standard dose of the drug. Remember, the Indian government has given a clean chit to Maiden Pharma, who was in the dock following allegations that its cough syrups were suspected to have caused the deaths of at least 70 children in Gambia. The Indian drug regulator claimed that samples of Maiden Pharma's cough syrups did not contain traces of diethylene glycol or ethylene glycol and were found to be of standard quality. That's not all. The Indian drug regulator also wrote to the World Health Organization alleging that the global organization's claims that Maiden Pharma syrups supposedly caused the deaths of children in Gambia had adversely impacted the image of India's pharma products across the globe. All right, that's the update coming in from the pharma space. Let's talk about commodities now, as promised. Manisha Gupta is joining us with all that update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with the crude oil prices, where we have seen some more decline for a second straight day coming in. And this is after, even as China is reopening the market, but the rising cases in China are triggering restrictions, not in China, but the other parts of the world. So the U.S. now says that the passengers from China will have to show a negative virus test to come in. Italy also has started testing arrivals from China, and nearly half of 2 flights were seen as positive for COVID from passengers coming in from China. So that really is now creating concerns world over. Apart from that, the markets will continue to watch out on what Russia does and say. As of now, we do understand that it is curbing exports to countries, imposing price caps from 1st of Feb, and that is what is basically keeping some support for the prices right now. But good gains is what has continued for the metals as a sector, especially iron ore prices, which are trading at a 5-month highs right now. Prices still below 30% from 2022 highs, but the expectation that the Chinese demand recovery is now coming in and China going forward will enforce proactive fiscal policy and prudent monetary policy in 2023 are some of the supportive factors.
Okay, so a lot depends on what happens in China as well. Manisha, thank you so much for joining us with all those updates. A quick look at what the Asian markets are doing. Still lower, a mild recovery is what we are seeing in the Taiwanese index. So it's down 1% right now. The Hang Seng continues to tread lower. That one down around 250 points. We have Nikkei, which continues its fall as well. And of course, what has happened in US overnight is something which is impacting the Asian markets as well. And the important cue for our own markets, of course, is the monthly options expiry. So that is something that will keep the markets very volatile today as well. SGX Nifty 2 has recovered just 10 points, but we'll have to see whether that happens with our own trading day today or not. Well, with that, we'll take your leave on this edition of Power Breakfast. Stay tuned. All the morning action or Bazaar Morning Call that comes up next.